Hi, my name is Venkat Vallabhaeni. I'm a managing partner in a fund called Inflexor. We are focused on investments in deep tech and IP-based companies, the two in B2B and enterprise sectors. This discussion is limited to the impact of Corona on startups in these sectors. So I'll focus on four different impact areas: supply chain, demand side, workplace productivity, and future fundraise. Let's talk about supply chain. Whether you're a very early stage startup working on developing a product or mature startup with full-blown production capacity, but depending on China or other countries for your components, you have to plan for delayed schedules. If you're an R&D company, your product development schedules will get delayed. And if you're a mature manufacturing startup, you'll have to manage your customer expectations for delayed product deliveries. Let's talk about demand side of it, which is sales and revenue areas. Before going further, let's look at the historical evidence of what happened in the previous economic downturns. Courtesy SaaS Capital Insights, they put together data from 17 public software as a service companies, so-called SaaS companies, how they performed during the previous recession. Overall, the SaaS model is fairly resilient to economic downturns. No company has become insolvent or declared bankruptcy. And actually, over 80% of the companies continue to grow, albeit at the lower growth rates. And many of these companies have lost approximately around 40% of growth rate during this recession, but they were able to bounce back fairly quickly after the recession, fairly quickly to the previous levels within few quarters. So the recession was fairly a small, kink in the curve, and then rebounded back to more normal levels, within few years after the recession. So profits for these SaaS companies, they stayed fairly flat during the downturn, because many of these SaaS companies have already existing recurring revenues they were able to maintain with, of course, some dip. But the existing profits, they were able to maintain the flat curve. Obviously, the new growth did not happen as before, but after the recession, they were able to come back. So, for SaaS-based companies, existing revenues will have lower impact, but if you have aggressive growth projections, they need to be reviewed and adjusted. And one more thing, if you are in enterprise software, those sales cycles will be longer, since either the decision makers are not available because of lockdowns, or they put a stop on any new spend or put a hold on new spend till things become clear or things improve. So be ready for those longer sales cycle as well. So let's talk about workplace productivity. Many of the startups are not well prepared for disruptions. They don't have disaster recovery, business continuity plans in place, or they are not prepared for working from remote. I mean, they don't have tools, such as data leakage protection, or VPNs, or laptops for everybody. They're not prepared for this kind of situation. So obviously the productivity will take significant hit in the first few weeks, but they will get adjusted fairly quickly because startups are fairly agile. They'll come back to the full productivity within few weeks. Now let's talk about future investments and capital raise. Let's look at this chart, courtesy Thomas Tungos, who is a venture capitalist at Redpoint, who talks about investment patterns during the previous downturn. So in 2006, VCs invested about 3.5 billion per quarter in seed ABC rounds. That grew to 5 billion in 2007 and early 2008. And boom, the investing velocity fell by half to 2.9, 2.7, 2.3 in the quarters following the crash. Of course, the market bounced back to similar levels in 2007, 2010, but needed approximately 8 quarters to return to the previous volumes. So we can assume similar kind of patterns in the current cycle as well. The earlier the stage of the company, the less it will be impacted. If you look at the chart again, different chart. So if you look at the seed chart, seed investments suffered 50% fall in Q3 of 2008, but the market came right back in Q4 and continued to increase and came back to the previous levels fairly soon. Series A and Series B markets had nice resurgence as well, followed by a little bit of retrenchment in late 2010, but came back with another surge. Series C took longer time for recovery because perhaps of higher valuations and market took more time to adjust than earlier categories. To summarize, adjust your delivery schedules if there is a dependency on supply chain from other countries such as China. 2, adjust for lower growth projections and longer sales cycles. 3, conserve the cash. Focus on reducing SG&A, sales and general administration, and other related variable costs. Review and potentially delay any expansion plans and CapEx spend. Number 4, be ready for delay in capital raise plans and more importantly, lower valuations. If possible, raise from existing investors because they understand your company better and possibly support you as well. But note this, greater constraints you have during the downturn, the better chances of success you have post the downturn. You might grow more slowly during this period if you had abundant capital, but if you can weather the downturn, you'll be well positioned to reap the rewards of next economic expansion. Thank you.